Okay, let's unpack this. In our hyper-connected world, every tap, every click, every single digital transaction leaves some kind of trail. We often make this silent trade-off, don't we? Convenience for privacy. We let private companies analyze our spending habits and, well, frankly, know more about us than ever before.
Right.
But what if we could have the ease of digital payments without just handing over our fundamental right to privacy? That's the really fascinating question we're diving into today. Can money actually be digital and private? And we're not just talking about another payment app here. We're exploring the digital euro. This isn't just some new icon for your phone. It's more like a foundational reimagining of currency. It asks whether we can design a digital payment system that, intrinsically respects core European values like privacy and data protection right from the start. So our mission today is to pull back the curtain on the critical data ethical and economic aspects of the digital euro. We're going to dissect its unique design principles, maybe compare them directly to the private payment solutions you're probably using every day. And ultimately, we'll look at what this ambitious project could mean for you as a citizen and for European businesses too. This is a deep dive into the future of money, designed with your rights hopefully at its core. So our deep dive today isn't just about understanding a new payment method, it's really exploring a radical reimagining of digital money itself. First, we'll try to uncover why this shift to thinking of it as a public good is so fundamental. Then we'll peel back the layers on its innovative privacy features, seeing how it aims to give you genuine control. After that, we'll investigate the ripple effects for European businesses, exploring potential new frontiers of innovation and autonomy. And finally, we'll have to confront that crucial ethical tightrope walk, the huge challenge of balancing individual privacy with societal security and how Europe is trying to navigate it. So what's truly groundbreaking about the digital euro, I think, starts with its very definition. It's planned as a public good. Unlike the commercial payment apps we all know, think your usual card networks or mobile wallets, which are mostly driven by profit and often monetize your data. The digital euro would be digital cash issued directly by the European Central Bank, the ECB. And that distinction is absolutely crucial, isn't it?
It's a huge distinction. It's a deliberate, almost philosophical shift. Beyond just not aiming for profit, think about the long-term strategic angle of a public good currency. It means prioritizing things like stability, resilience, universal access over, say, squeezing out profit from data or rapid commercial feature churn. This isn't just another payment app. It's meant to be a foundational layer, something available to everyone. It protects against scenarios where, private payment providers might fail or censor transactions or even pull out of certain regions. It's really about building a digital bedrock for Europe's economy, ensuring there's always a public option for what is essentially an essential service.
That's a really key difference. It's designing a system not for revenue, but for citizen trust and societal benefit. And when it comes to trust, well, the people of Europe have spoken pretty clearly. Public consultations show that privacy is the absolute top priority for Europeans regarding a digital currency. The ECB seems to have really listened, placing data ethics right at the heart of the design.
Exactly. And this commitment to privacy by design isn't just, a nice phrase. It's meant to be an engineering philosophy. Imagine trying to build a system where your personal identifying information and the transaction data are fundamentally separated at the architectural level, not just by rules. It's kind of like designing a house where the doorbell physically cannot record who rang it, but it still lets you know that someone rang. This inherently limits the potential for future mission creep or misuse, even by the central bank itself.
That's a powerful analogy. And to put that into practice, one of the most innovative ideas is an offline function. Can you explain that? For small face-to-face payments, you could transfer digital euros directly device to device, no internet needed. What's the big deal for privacy there?
Well, in that specific scenario, your personal transaction data would only be known to you and the person you're paying. That's it. Not your bank, not the government, and critically, not the ECB. This really mirrors the privacy you get when you hand over physical cash. It makes it untraceable by any central authority. So this isn't just about convenience when you don't have Wi-Fi. It's actually a profound statement about the possibility of digital anonymity, showing a central bank can issue digital money that genuinely acts like cash in that untraceable way, at least for these small offline uses.
Wow. So it's like bringing back that discrete handshake of physical cash, but in digital form.
Yeah.
Who hasn't felt that little pang of, is this being tracked? When you tap your card for coffee or something small. This sounds like it could be a real game changer. But, okay, what about when you are online? For, most online payments.
Even for online payments, the plan is for a very high degree of privacy to be baked into the system itself. The ECB is committed to a model where it cannot directly link transactions back to specific individuals. Your identity would still be known by your bank or your payment provider like it is now with your bank account.
Uh,
But the central system, the part actually processing the payment, would use what's called pseudonymous data.
okay, can you break that down? What does pseudonymous data actually mean for someone listening? How does that work?
Yeah, sure. Think of pseudonymous data as being like a really effective alias, but generated automatically. Your bank knows you are making a payment, right? But when that payment instruction hits the central digital euro system, it gets stripped of your direct identifying information, your name, your account number, etc. The central system sees a unique, perhaps temporary code that's the pseudonym attached to the transaction details.
Okay.
But crucially, the central system itself has no way of linking that code back to you, the actual person, without going back through your bank's separate controlled records, likely under strict conditions. It's sort of like using a secure, one-time use token for each transaction from the perspective of the central ledger. This makes large-scale, real-time tracking by the central bank practically impossible by design.
That clarifies it perfectly. So the system allows the payment, sees that a payment happened, but is fundamentally designed not to see who's behind it centrally. That is a huge shift from many current data-hungry models. And this commitment, it extends to a core ethical promise too, doesn't it,
Oh,
about how the data can't be used.
absolutely. The digital euro is intended as a public service. That means it would be legally forbidden from monetizing your payment data. Full stop. This is just a world away from many commercial platforms that, let's face it, track your spending to sell you stuff, or share data with advertisers, or build profiles. With the digital euro, there's supposed to be zero commercial interest in your spending habits enforced by law.
And it's interesting because this bedrock of trust, this sort of fundamental reprioritization of user rights, paradoxically, that might be precisely what unlocks significant potential for Europe's economy. Because when you remove that fear of data exploitation, you don't just protect people, you potentially create fertile ground for a different kind of economic growth. One built more on transparency and maybe a more level playing field. Let's pivot now to those potential economic implications. What kind of opportunities could this actually create for European businesses? Imagine perhaps lower costs, maybe a fresh wave of innovation built on trust, not just data harvesting. It sounds like it could be about more than just convenience, maybe about strategic autonomy for Europe and a more equitable playing field.
Indeed, the digital euro could offer a low-cost public alternative to the dominant private payment networks, and let's be honest, many of those are non-European. By introducing this public option, the digital euro aims to significantly cut transaction fees for merchants. And this isn't just about saving a few pennies here and there. It fosters greater strategic autonomy for Europe's economy. It gives businesses more control over their financial infrastructure and lessens the reliance on external, sometimes monopolistic, payment providers.
Can you give us maybe a concrete example? How might this help, say, a small business, an SME, somewhere in Europe?
Sure. Let's imagine a small craftsperson in, say, rural Portugal selling handmade items online to a customer in Finland. Currently, they might be dealing with different card processing fees, maybe some cross-border payment complexity, perhaps delays in getting the money. The digital euro, as a potentially universally accepted, low-cost payment method right across the Eurozone, could just flatten those hurdles. It could make cross-border trade feel almost like a local transaction.
Hmm.
This isn't just about shaving a tiny percentage off a fee. It's about potentially unlocking new markets for these SMEs, fostering genuine pan-European digital commerce, and empowering local businesses to operate much more easily across the entire Eurozone.
That's a compelling vision for empowering smaller players. And what about innovation? What does a system built on privacy and public good mean for European fintech companies?
Well, for innovation, a digital euro could create a standardized open platform. That's really key because it allows European fintechs to build new, innovative services on top of a trusted foundation that already respects user privacy by its nature. They wouldn't need to compete on who can grab and monetize the most data. Instead, they could focus on creating genuinely valuable services, things that enhance financial inclusion, streamline business processes, offer novel payment experiences, all within an ethical framework.
I see.
This could actually give them a significant competitive edge globally, especially as people worldwide become more concerned about data exploitation.
So it's about fostering responsible innovation, where the innovation itself kind of aligns with European values.
Precisely. And beyond that, just think about the operational benefits. As a universally accepted, secure form of payment across the whole Eurozone, it would massively streamline things for businesses, imagine. Improved cash flow because settlements could be near instantaneous, less complexity from juggling lots of different proprietary payment systems. Just a simpler, more secure way to manage payments for everyone, from a tiny local shop to a huge multinational.
This vision sounds incredibly promising, it really does. A more equitable, innovative digital landscape. But as with any big innovation touching something as fundamental as money privacy, the path forward is, well, rarely straightforward. And that brings us to what is probably the most intricate, the most critical aspect of this whole project. The really deep ethical dilemmas at its heart. Okay, now let's try to navigate what's arguably the trickiest part of this project, the ethical maze. The core dilemma, and it's a huge challenge, is balancing that fundamental right to privacy with the legal duties to prevent things like money laundering and terrorist financing AML-CFT. It seems pretty clear that total anonymity for all transactions, especially really large ones, just isn't going to fly under current laws or, frankly, societal expectations. This really is a tightrope walk, isn't it? How do you maintain the integrity of a public currency while also safeguarding the individual liberties it's supposed to protect?
It's absolutely the central tension. And the proposed solution seems to be a tiered approach to privacy. So you'd have very high privacy for your everyday low-value payments, especially with that neat offline function we talked about.
Right.
But for very large transactions, similar to what happens now, if you move a big sum through your bank, there would be standard checks. These would be much like the rules already in place in the existing banking system.
Yeah.
It's about being proportionate, risk-based, making sure the necessary safeguards are there, but without crushing privacy for just buying groceries.
That makes sense, trying to find a balance. But a major public concern, and you can understand why, is the fear that a digital euro could become a tool for state surveillance.
Mm-hmm.
How is that specific concern being addressed?
Yeah, that's a critical question. How do you stop misuse while sticking to core values? The tiered approach is part of it, but so is something called decentralized governance. That's crucial. This decentralized governance isn't just a vague promise. It's meant to be a structural safeguard. It means the infrastructure itself, the running of the digital euro, would be distributed across multiple independent bodies, not just solely controlled by the ECB.
Okay, how would that work?
Well, you might imagine separate, legally distinct entities responsible for things like identity verification, maybe transaction processing, technical upkeep. This separation of duties, actually built into the architecture, fundamentally limits any single party's ability, even the ECB's, to just hoover up and link all your financial data together. It acts as a pretty strong safeguard against centralized tracking.
So the structure itself is designed to make widespread surveillance extremely difficult, maybe impossible, just by how it's built. That sounds like a serious commitment.
Absolutely. And if you connect this to the bigger picture, it really shows a deliberate effort to embed ethics and accountability right into this fundamental public utility from day one. This is also why data minimization is such a key principle here.
Oh, like with GDPR.
Exactly. Following GDPR principles, Europe's tough data privacy law, the digital euro system is supposed to collect and process only the data that's absolutely necessary for the transaction itself, and for those required AML-CFT checks on the bigger sums. The stated goal is explicitly to avoid creating some massive centralized database of every citizen's financial life.
And this isn't just theory, right? The digital euro is currently in what they call a preparation phase. This came after a 2-year investigation where the ECB researched and consulted quite a bit. What were some of the key challenges or discussions during that initial phase, beyond just landing on privacy as the top priority?
Oh, that initial investigation was incredibly complex. I mean, beyond confirming privacy was paramount, they had to wrestle with really intricate questions. Things like interoperability. How does it work alongside existing payment systems? What's the precise technical architecture needed to make it resilient but also fast? How do you get buy-in from banks, businesses, and citizens?
Right, lots of stakeholders.
Exactly. So the decision to really focus on privacy wasn't just a simple survey result. It came out of extensive debates about how to mesh cutting-edge tech with these core European values, navigating all these different challenges to try and arrive at a design that felt robust and ethical.
That paints a much broader picture than just the tech side. Huge groundwork involved. And where does the project stand now? What about democratic oversight and actual implementation?
Well, the European Commission has already put out draft legislation, which sort of outlines the proposed legal framework. And really important institutions like the European Data Protection Board, the EDPB, which is the EU's lead authority on data protection, they're actively involved, providing opinions and guidance. Their job is to make sure the final rules are strong and truly protect your rights.
Though,
But it's vital to remember a final decision, the actual green light to issue a digital euro, will only happen after the EU's co-legislators, that's the European Parliament and the Council, representing the member states, have debated and formally adopted that legal framework. This ensures there's strong democratic oversight throughout the whole process. It makes it a truly collective European undertaking, not just something the central bank decides on its own.
so wrapping this up, what does this all mean for you listening? The digital euro isn't just about a new way to pay. It's really a grand experiment in digital ethics. It presents this vision where you could potentially enjoy the convenience and speed of digital payments without giving up your fundamental right to privacy. It's a vision that tries to directly reflect core European values, building a payment system centered on trust and public interest, not profit from data. This whole project really highlights the massive challenges in striking that right balance, privacy, security, usability in our increasingly digital world. But the commitment to placing data ethics and citizen rights right at the heart of it, even with all the complexities, well, that feels like a potentially promising sign for the future of digital services generally.
Indeed, and it leaves us with a thought, doesn't it? What might the successful implementation of a privacy by design public currency teach us? Could it offer lessons for building other digital services, everything from social media platforms to smart city infrastructure in a way that genuinely prioritizes individual rights over just commercial gain? It's definitely a question worth pondering. It really touches on the future of trust in all our digital systems and, the path of responsible innovation for potentially decades to come.